What is interesting is things like service worker pay continues to be very strong and increasing. A lot of these like local small businesses increasing prices. We see kind of this white collar recession that you're describing. But when we look at the American consumer, you have a savings rate that has been absolutely destroyed. I think it's at a historic low. Credit card debt exploding upwards. Interest rate on that credit card debt exploding upwards. And it's like all the signs that like the consumer's in trouble. And at the same time that we're like on the precipice of a recession and the consumer is struggling, the Fed is basically like kind of walking over to the cliff and they're like, I'm going to kick these people off, right? And like, let's see what happens. Do you think that they have to just focus on inflation and like whatever pain comes to the consumer, we just got to deal with it? Or like, can there be that soft landing that they keep kind of pointing to, saying like, you know, we'll put the ship right into the Hudson, like a pilot Sully over there, and like we'll be good. We'll all walk out of this thing.
Yeah, I think there was increasing belief in late Q4, early Q1, January timeframe where it was like, okay, we're gonna go from everyone kind of thought there was a hard landing coming to soft landing to no landing, right? Like, oh, this all of a sudden they might actually do this. And I think with kind of, you see like China opening up, they're, shoving money out again, they're printing, the consumer's still pretty strong. Like you're talking about the service industry, that's still piping hot. Inflation, which is, part of their dual mandate, we could debate, I think that's a different story about like whether that mandate is even, not worthy, but, they're kind of their dual mandate of maximum unemployment and 2% inflation. What's the official wording of that? Price stability, right? It's not, price increasing isn't stability, but that's another story. We can have that debate about whether that's even the right goal to have. And some
Do you think it is?
I think it's part of this Keynesian economic paradigm, which is, everybody's kind of been raised in and brought up in. And so like the Bitcoin perspective, the Austrian perspective kind of looks outside of that box, almost like, from like a fourth dimension. It's like we're looking in on this system, this incumbent system, like, this is the matrix. But this is the world we're in, right? I'm not naive enough to not understand the game that's being played, right? So the Fed, despite, the labor force participation dropping after COVID, right? This official data says unemployment's at 50-year lows, right? So
3.4%.
3.4%.
Did you read the numbers?
Yeah.
And the small business down the street can't find anyone to work.
Yeah. And so it's certainly a really interesting business cycle. And I think they're going to really, and who knows, maybe they don't follow through. Maybe, Powell kind of, as Arthur Burns reincarnated, the Fed chair that in the face of inflation kind of backed off and let it rip, right? That would certainly be very, very interesting. But I think, and this is political, right? I think they were embarrassed by the transitory call in 21. Inflation's transitory. Don't worry, guys. They were dead wrong, and because of that, their credibility was kind of shot a little bit. So they're going to try to reinforce that their dominance, I guess, on the market. And I think they purposefully want to inflict pain. So financial assets. Some people are pretty bullish for 23. I think stocks and bonds continue to be correlated. I think they struggle. I think Bitcoin could have periods of decoupling or relative strength, but I don't suspect a raging bull market, at least for the time being.